of the regional players or some of the GCC players that came into these markets, whether it's Malaysia, whether it's Indonesia, or some of the markets, and presumed that if we are successful at home, we can be successful anywhere else in the world. Which reiterates the point that you should stop wanting to be a global bank, and as opposed to being a globally recognized brand. These banks, regional banks that you allude to, that are not so successful and could not grow, were trying to compete with some of the larger domestic players in the market. You definitely need to make sure that you have the right partner on the ground to have, let's say, a joint venture with some of the local bank, because local know-how is very important, which is a strategy that we adopted. In case of Indonesia, we did not come and manage 100% operations on the ground, not because the regulator does not allow it, that's a different thing, but there are ways around it. But we made sure that we find the right partner on ground in order to take forward our Indonesian operations, and we found that on ground here. So we are now have a 40% stake in one of the local
Bank Panin.
Bank Panin.
Yeah.
We have a 40% stake, and Panin is a homegrown Indonesian bank, and it's very strong when it comes to its core operations. Now, how do we add value to Panin's operations? And these are Panin's Islamic operations, is that the know-how that we've developed over 40 years in Islamic finance is something that we want to bring on the table to Panin. And with Panin's local knowledge, whether it is the cultural knowledge that they have, or it's the knowledge about the corporates or the sovereign space that they have, and their ability to enter into the uncharted territories of Indonesia, right? Which puts in perspective of our plans about growing through microfinance, through microcredit, based on Islamic principles that we boast of over 40 years, with a local brand which is as strong as Panin. Making commercial sense for the shareholder at Dubai Islamic Bank, because we've not made a very large equity investment, right? So I think where people got their strategies wrong in the past was they thought it is all about the money. So let's bring our money, let's pump it into a market and we will grow. So they went wrong there. If it was not about the money with some of the other players, they did not get the right partner. And if they got the right partner and if they had the adequate capital, then they did not have a strategy that would be unique as opposed to some of the other strategies that some of these banks are following, right? So I think it's a combination that has worked for us, and it's a combination that we have studied very well over the last so many years and have not made any hasty decision in trying and coming into a new market. We are walking before we run. We know what exactly we want. There's a strategy. There's a 5-year, 10-year strategy for Far East Asia. It revolves around Indonesia. It also revolves around Malaysia. And Malaysia. It also revolves around Malaysia. And I think it's a strategy that we are seeing work for us. And it's a strategy that you will not see us overnight getting bigger and acquiring a lot of institutions here and there. We are humble players with very modest beginnings, so I think we'll continue to do that.